the largest fight being fought right now is not in the ring, it's not in the octagon, it's in the stock market. And the combatants are the bull market and Donald J. Trump, the President of the United States. And the result of this battle has huge implications, not just for, the stock market and the economy and all that, but also to you as an individual. And that's what we're going to be talking about in this episode. Now, if we look at the stock market ever since the inauguration of Donald J. Trump 2.0, it has done nothing but tank, and tank pretty severely. I mean, this is kind of dated, and actually we went down to 10% now, so this has gone down quite hard since he came into office, which is a huge contrast with his first term, where the stock market pretty much just shot up after his inauguration. And this is something that I mentioned in an episode I did 2 weeks ago, where I called out that it was really weird and eerie that, Trump didn't mention the stock market in his campaign at all, and even after he started as president, and that silence actually was an ominous signal that essentially I thought he was offering the stock market up as a sacrificial lamb. And what he was offering the sacrificial lamb up to is something we'll talk about in a bit. Now, in the past 2 weeks, the stock market has really taken a dive, and we can see here in this pretty much controlled but significant downturn here. We've actually had 3 attempts to bounce, right? We've had 1, 2, 3, and in the previous 2 attempts, dip buyers came in and they were just slaughtered the next day. And the 3rd attempt, which is just this last Friday, is actually a moment I did go long, right? So on Thursday, I made the decision that the market had bottomed, and on Friday, right at the market open, I took in positions to go long. And that was because there was an indicator of mine that flashed that we had bottomed. And, we'll talk about this later on in the episode, but basically now I'm long the market over the weekend. I held my positions, and we'll see what happens when the market's open on Monday. And also this week, I actually opened up a Discord server to, I guess, a few people. I put it on a post, so it wasn't like something I talked about in a video or anything like that. I just put it on a post for a few people who had been reading my YouTube posts to know about. And we started the Discord server, and we've built actually a pretty, I think I like the community, some really smart people there that I've met. The discussion and level of discourse is actually quite good, I would say, compared to what I see in my Twitter feeds and all that. So I encourage you to come in and check out our Discord server, because there's actually quite a lot of content there that is, I think, quite high quality, if you ask me, from people contributing. And also I do share a lot more, and people ask me a lot of questions, and I do respond there. So when you have a moment, come check out the Discord server. It's something that's growing quickly, and I'd like for you to have a shot at joining while it's still young, so we can help form what the community looks like as it gets and grows larger. Now, let's talk about the last week, which was full of crazy, crazy market movements. A lot of it driven by news headlines such as this. I mean, Trump came blazing out. I mean, he's calling the EU one of the most hostile and abusive. Look, hostile and abusive are really strong words. And for the President of the United States to call the entire EU those 2 words, I mean, it's kind of crazy if you think about it, right? Like this is kind of like an impossibility. Just like 10 years ago, like you would never think the President of the United States would call the EU these types of strong words. But this has been going on all last week. And if you think about it, it just escalated, because then he started going off on the Canadians. Canada then retaliated, threatening to raise the electricity or even shut off electricity to some, northeastern states in the U.S., to which Trump came back and said, look, we're going to raise tariffs to 50% on steel, and 50%, okay, is no joke, on something that's so base as steel and aluminum to a nation's industry. I mean, this is some crazy stuff that was going on last week. So crazy that mainstream media was basically begging and pleading Trump to just stop doing it, right? Because, I mean, whenever the markets, would kind of like stabilize, I mean, he would say something and it would just like freaking sell off, like boom, air trap would open, fall down. And I mean, people are just getting, Pavlovian trained to this and begging him to stop, but he wouldn't, right? He wouldn't. So, I mean, it just kept on going on where even on Friday's bounce, people were so disheartened by this that they'd be like, yeah, well, nice. I love this meme. It was like, nice bounce. Shame if someone tweeted about Charis. But that was essentially, this meme pretty much explains what was going on the whole week last week. And I tell you, it was quite a sight to behold. Now, why is Trump offering the stock market up as the sacrificial lamb? For what? And, my understanding of what needs to be done and what I think Trump is trying to do is to lower interest rates because of the national debt. Over $33-35 trillion, depending on who you want to believe. But easily over $30 trillion in debt, causing huge problems. And with the latest data that came out for CPI and PPI, we can see that inflation is kind of like softening, which is good, right? That gives the Fed some leeway to cut interest rates and lower it, which is what Trump wants. And so this is a good thing that the CPI and PPI data came out soft. And interestingly, that did spark the stock market to pop, right? There was an initial pop and then it just like continued tanking right after both CPI and PPI. And that tells you a little bit about the market dynamics, switching a little here, that there are bigger forces at play than just the inflation numbers. One of the reasons why Trump wants to lower interest rates, and this is one that we can't deny, is that the government itself has a huge amount of debt maturing in 2025. And, I've brought this up before, I'll bring it up again, because you can't underestimate this amount of debt coming all in 1 year, right? Look at the size of that bar. That is like a rogue wave, as I mentioned in my previous video, coming to shore, right? And you can't just like wish it away. It's going to hit. And when it hits, you don't want to have such a high interest rates because your debt service, your service cost for the interest payment is going to be so high if interest rates are high. So you want interest rates to be low so that when this debt comes home to roost, you have more options to roll it over and to pay it out, right? And so this is one of the big reasons why interest rates need to go down. Otherwise, you're going to really spiral into a hyperinflation mode, because then you'll have no choice but then to just print more money to service this debt, which then just fuels this whole, like, I print money to service a debt, which costs more inflation. And it just like becomes this reinforcing cycle that it's a trap that you can't get out of. So he's trying to avoid that, I think, along with other issues with the treasury market, where the international foreign buyers of U.S. treasuries are starting to balk at it, which is one of the reasons why the yield keeps increasing, even though the Fed has been lowering its short-term rates. Now, aside from government debt, there's also private debt and securities that haven't been marked to market or realized as a loss yet. And it's just, and I also have been showing this over and over again, but we can't discount the importance of this. If you look at what was going on in the great financial crisis in 07-08, I mean, the amount today just completely dwarfs what was going on back then. And the reason is we've had like pretty much zero interest rate policy, or ZIRP, for decades. And all of a sudden the Fed was forced to just skyrocket the interest rates in one of the fastest rate hike cycles ever because of the sudden, quote unquote, unforeseeable inflation that popped up a couple of years ago. And that caused, when you have 10 years of 0% interest, or even negative real interest, and all of a sudden just spike the interest, that's going to break a lot of things and catch a lot of people off guard. And yes, they were caught off guard, and now they're sitting on all these losses that they're praying will get fixed by the time they come to maturity, so they don't have to realize the loss and can roll it over or pay it out. But this is, this was decreasing, but it's increased again, right? This last bar has gone up. So this is another reason why interest rates need to go down. Like, if this thing blows up along with the government debt, that's a 1-2 punch that can't be, that's gonna cause a systemic risk that needs to be avoided. And I'm pretty sure Trump is aware of this, along with all his financial advisors in his crew. So Trump has been pretty much doing what he needs to do and not really caring about the stock market, which has been, as I showed earlier, kind of tanking now to correction levels at 10+% from the peak. And, if you look back and reflect on the way the market has tanked, it's actually been a very well orchestrated and not haphazard and um, you know disorderly way of coming down, if you think about it. And I'm just going to show, there's a lot of reasons where you can see that through data points, and I'm just going to show you a couple just so you understand why that actually matters in looking ahead of what's going to come probably later. So this organized and well-structured type of downturn that we've seen the past week and a half or so is reflected in the VIX, right? And if, this is a long-term view of the VIX going all the way back to 87, where we had Black Monday, and, where it's still the largest single-day crash ever in terms of percentage, at over 20% in a single-day crash. That was a high of the VIX, right? Ever since then, we've had some spikes, right? In 07, 08, we went up to, 90-ish. Then we had recently a couple of spikes as well with COVID, and then we had that whole like yen carry trade spike. Like these were disorderly, downturns, right? They were disorderly. That's why they went up basically over 40, 50, right? What's been going on recently is we've stayed pretty much under 30, 20. Like that's not disorderly, right? That's a very well orchestrated and coordinated stair step down, even though it might seem like, and it might seem like that to people today because they haven't really seen too many of these like flushes, because they haven't, we haven't had a real recession really since 07, 08. And so that might seem like that to, I guess, the newer people but it's really nothing, right? This is definitely not disorderly. And as we know, the Federal Reserve doesn't care about the markets or stock market going down a lot even. It doesn't really care. What it cares about is the way in which it goes down. And if it's a disorderly way of going down where the VIX spikes and all this, I think that it doesn't like, and that's when it'll have an emergency meeting and start cutting interest rates all of a sudden, right? But, orderly market tanking doesn't care, right? And so Fed, I don't think really cares about this right now. And, also Trump doesn't care. And Trump's been asked like, hey, what are you going to do about the stock market? And he just said like, I don't really care, it's going to go up. But like I said, it's a sacrificial lamb. He's doing what he needs to do without caring 2 seconds about what it's going to mean to the stock market. And then he's going to have the Trump card later of actually optional, as an option, being able to really crash the stock market by doing something really crazy to force the Fed's hand to then, at that point, it would be a disorderly crash, which would have systemic issues and risks. So the Fed would then have to be forced to cut rates and do an emergency rate cut even. And that's how Trump could force Powell's hand to cut rates. And while he hasn't done that yet, that is an option that he can trigger at any moment in time. Now here's a more technical thing that you'll see about how the stock markets have been going down in a controlled fashion. If you blow up how it's been going down, you'll see that whenever we come close to oversold levels, right, we suddenly have this. And if you look at the way the buying is, it's programmatic algorithmic buying, right? This is at the 5-minute scale, so just solid green bars just to shoot things up, right? Boom, 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 boom. And this is, to me, one of the ways, you can see market makers and the way, I guess it's, if you want to call it being manipulated or let's say managed downwards, right? So they won't let it just like crash. It'll go down, and when it gets to oversold levels, we could trip, the CTAs into like some serious crash potential. Like they'll just, it's like anti-lock braking, it's like you're pumping the brake pedal so your tires don't lock and you start skidding. It's like you're pumping the brakes on the market, right? So whenever like it's about to, the wheels are about to lock, and you start skidding, that gets dangerous. Like they'll pump the brake a little bit, they'll spurt it up a little just when it's about to get, into these oversold levels. And if it dips a little, they'll quickly shoot it back up. And I was watching this over and over again throughout the past week. And to me, that's, pretty clear that this is not the crash. This is not the, oh my God, unknown, Trump's pulling the trigger, no. This is a very well coordinated, managed movement down. But I do think we will see that uncoordinated, disorderly type of movement coming, but not right now. This isn't it. The other thing that you must recognize is there's a lot more going on than the superficial like stock market movement and tariff, news headlines that you see, or even market data that you see. And one of the places one of the signals, the clearest ones that I've seen, is what's been going on with gold, right? And, I do want to bring up this chart because this is a very, very long-term chart going back to the early 1900s. And if it's kind of crazy when you look all the way back then, but if you pull it back that far, you'll see that there are, in fact, some support lines, right, that are over about a century old, right? And we've hit them a few times over 100 years. We just kind of hit one here. And what happens is you see that there are these cycles where there's a rotation from capital from the stock market into precious metals and then back and forth, right? And the last time was in the 1929 rather, Great Depression. That was terrible, right? 80% just wiped out. And that led to this like 2-decade plus long time period just to recover. And capital went into precious metals back then. We had a similar thing going back here in the 60s leading into the 80s where, we had these 50% drops in about a decade to recover the last one, and capital rotation into precious metals. Same thing happened back in the dot-com 13 years back then where it went nowhere, precious metals. And it very may well be, and I truly believe we're entering one of these cycles again where we're just going to go again nowhere sideways for over a decade or so, and the capital is going to rotate into precious metals. And it's no surprise to me that gold is at 3,000 and hit just this last week its first time ever at 3,000, a new all-time high, because it is entering this rotation into precious metals. What's been going on this year with gold is there is this thing called Basel III. This Basel III thing, or this Basel thing, was created actually because of the screw up in 0708, where basically it was, banks gone wild, right? Lending things that they don't have and blah, 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 leveraging the whole CDO, CLO, and all that stuff. Anyway, after that debacle, right, they got together, the world got together, international organizations got together and said, look, let's prevent this from happening again in the future. And the way to do that is we're going to create this Basel III thing where, among other things, we're going to make sure that you have enough of these, what they call tier 1 assets parked in your organization so that you can't blow up. Like it's just there and you have it, right? So if somebody comes calling for you, you have that as backup. And one of the things that they decided to include into this tier 1 category, which is the top category of safe asset, right, is gold, right? It should always have been there, but central banks and government hate gold because it prevents them from printing money and financial discipline. But they reinstated it as a tier 1 asset, clearly defined specifically as a tier 1 asset, and it's been delayed a few times. But basically, in July of this year, they said that's it. That's the deadline. You got to have it, right? And wow, look at the gold coming back in, right? And it's the amount of gold, and I've talked about it over and over again, that's come back or reshored to the United States is so crazy, right? That it's impacting the trade deficit data, and even though it's not part of the GDP calculations, as it says here, like the trade deficit is just skyrocketed as a result of all the imports in gold. So what's been going on with gold for decades and decades is this thing called rehypothecation or hypothecation, where it's basically they're doing what banks do to money, but with gold, because ultimately gold is money, right? And so what they've been doing is they would just lease out the gold they would have in their coffers, and they would be the U.S. government, right? So the U.S. Treasury and the U.S. Fed basically allowed, and not just allowed, but encouraged the bullion banks like JPM and all the big banks that actually have their own gold stashes and vaults. They would encourage these bullion banks to, lease their gold, the government's gold, out and make money. The same way that banks would take you deposit money into a bank, they would take a portion of that and lend it out to other people. And so they would just keep a fraction of it. That's why it's called fractional banking, just in case you came asking for money, that they would have some of your money at least in the bank and could take it out. And the rest they would lend out at a certain interest rate and make money that way. That's how banks make money. Same thing was going on with gold for the longest time. But they would do other shenanigans. They would short gold and keep prices down to mask inflation and make things not seem so high in terms of increase in prices. Do all sorts of things. This has been going on for like many, many, many decades, right? But what happened recently is there's been a shift somehow. And just like I talked about earlier, all of a sudden the Fed, raising interest rates after, shock race of interest rates, all of a sudden after, zero interest rates, there's a lot of damage done because people are caught unprepared. And what's going on is all of a sudden, and this is the part that is speculative, but this is also the part that should tell you that something's happening, is the US government has, for some, whatever the reason, and there are theories out there, has demanded the gold to come back to the United States physically. Stop the hypothecation or rehypothecation and bring the gold back. And this has caused all the gold bullion banks caught off guard all of a sudden, right? So they've been happily making lots of money lending gold out, leasing it out. All of a sudden, U.S. says, no, it has to be here. They're caught red-handed, right? So they don't have enough gold. So we basically have a gold run, which is very similar to a bank run. Imagine everybody going to the bank asking for their cash back at the same time, which is what happened with Silicon Valley Bank a couple of years ago. It's the same thing. The bank doesn't have all the money that you have if everybody comes at the same time, and that causes a bank run and banks to collapse. Well, something similar is happening with gold, right? Everybody's asking for their gold back because it's coming back here to the United States. Bullion banks don't have all the gold, so like the Bank of England doesn't have gold, right? And so they've extended what usually should be they would give you your gold the next day. Now they said in a few months you'll get your gold back if they have it, right? But they probably lent out many more times than what they actually have because that's how you make money. And so now comes the real question, right? Now comes the real question. Why has gold all of a sudden been called back by the US essentially? And why has gold price gone up to now record high in 3,000, right? What's driving this? Now, this is the part where nobody knows. It's top secret, right? Nobody knows why the government's doing this. There's some speculation as to why. One of them is that the government's thinking about creating US treasuries backed by gold. And the reason why is because there's so much damn debt that it's getting harder for them to sell the treasuries because all the foreign buyers of US treasuries are looking at the amount of debt that the US has and they're thinking, you know what, there is a chance you might not be able to pay all that debt off and something bad happens. So I don't want to buy your US treasuries. It's not as safe as it used to be because you just got too much debt now. And so for me to buy it, you're gonna raise the interest rates, and this is that whole interest rates going up problem, right? And so the idea is, well, maybe if they create treasuries backed by gold, that would give the confidence, right, to these buyers then to buy and continue buying U.S. treasuries. So that's one of the reasons, potentially, why they have this. The other reason is all this, and I also talked about this whole Fort Knox audit thing, rather. A couple of weeks ago, way before it became news headlines, I told you that might be happening, and it's still up in the air, but Trump has said he's going to do it. Got to have the gold, right? Has all the gold been leased out, or is there any gold there, or even who owns the gold? Could be one of the reasons why the gold's coming back. The other reason is that the U.S. is playing catch-up, right? Every other central, or most other central banks out there, at least of countries that are established, and I'm not talking about El Salvador type getting BTC into, I'm talking about real big economy countries, have been stashing gold. Russia, China, the BRICS, stashing gold, like I said in earlier episodes. And so if BRICS becomes a challenge and gold is their fundamental store of value, then the U.S., if they're going to be safe or challenge or weather it off, probably need some gold as well. And so that could be another reason. So honestly, nobody really knows why, right? But this is what I meant earlier, where there's something else going on besides just this traffic, is this. There's some pretty big monetary financial regime changes that are being discussed and in the works right now. And one of the ways you see that happening is what's going on with gold, this crazy reshoring of gold and gold prices going up, and nobody really knows why, and they're getting all these false answers as to what's going on. That tells you something is going on, and it's being worked along with all this tariff stuff that's happening and the budget cuts and all this other thing going on. There is some kind of master plan being developed by Bassett and Trump and his cohorts, even Doge. There is something being worked on. Make no mistake, this is not just random flashes in the pan. There actually is a strategy, but obviously they can't tell you what that strategy is because that would undo what they're trying to do. So they can't tell you what they're trying to do, but there's something going. I tell you, these guys aren't just randomly like firing, they're not stupid, right? They really aren't stupid. I don't think so. They're not firing bullets into the air randomly. They have a plan. They're just not telling it to you because they know if they tell you what the plan is, it's going to undermine the implementation and successful execution of the said plan. Now let's talk a little bit about the stock market, what's been going on, and how I'm positioned to, make money off of it in the coming week. First thing I want to talk about is our good old friend, the inverted yield curve. Now, if you remember, I've been talking about this as well, and I caught a lot of flack, people saying, that doesn't work anymore. The yield inversion is like an old world thing, and it doesn't apply to the new way of, new economics. I don't think that, they're the same people who said, don't listen to Warren Buffett. He's just an old dinosaur. What he used to, guys, the inverted yield curve is still the most significant, accurate indicator for recessions in my world. Has never been dethroned. And the last few times it happened was back here and here, and it triggered here, right? And guess what happened? Yeah, we got that little tiny sell-off. Trust me, if you think this is it and this is going to continue up and this is just some random coincidence why this yield curve happened and then we had this 10 correction drop, I'm telling you, it's not random coincidence. We got uninverted, right? We got uninverted here. This happened after the uninversion, right? Trust me. We're going into a recession, at least possibly stagflation, depending on what happens with inflation, with what the Fed does. But we are going into a recession. So back in late February, I brought up the Wyckoff distribution pattern. And not many people are talking about it, and still not many people talking about it. But this, to me, was one of the key signals, right, that got me to go short and ride the whole thing down. Because back up here, I told you, we were at the last point of supply stage, which is basically the end, right? And that we followed basically a textbook classic Wyckoff distribution back in Feb 25, and I completely flipped long back then. And as you know, I've made some good returns. And I can't tell you enough of how important some of these patterns that emerge that if you can see and execute and have the discipline to, will make you a lot of money. Now, since then, we've come down quite a bit, right? And as I said earlier, we've had these false bounces, and we just had another one on Friday, right? But as I mentioned to you earlier as well, I actually went long on the moment Friday opened, the markets opened in the morning, because on Thursday, I decided that we had put in a bottom. And the reason is, and this is where I'm going to show you this indicator that I've built of mine. I have this indicator. Let's call it the FoFty indicator, right? Or I was calling it on in the Discord forum the super duper secret indicator. That's just because I didn't have a name for it, right? Never had a reason to name it, but let's just call it the FoFty indicator. But basically, whenever this thing, okay, spikes up and goes back down, it signals a change in the direction. Change could be going up or going down. It doesn't matter. It's just a change in the direction. Last time it happened, 2 times was over here with a big drawdown there. And there, this started the distribution of the Wyckoff pattern, right? Which is why I didn't tell it to you back then because I didn't show you my proprietary indicator back then, but why I was so convinced that it was a Wyckoff distribution pattern. So I pretty much wrote this whole thing down. And it just triggered on Thursday, right? Leading into Friday, it went up by a lot. And even though it hadn't gone down, I already knew that it had triggered because the amount of which it went up was already telling me I'm plus minus 1-2 days off the bottom, and I don't mind like being off 1-2 days, right? I can stomach the hold. So that's why on Thursday I saw this. I said, look, I'm flipping long on Thursday now. I'm flipping long, as I said in the Discord channel, and on Friday as soon as the market opened, I went long on TQQQ, which is leveraged long Nasdaq, and also short volatility through SVXY. And so I'm expecting a counter trend rally here. MACD is also curling up. RSI had this minor like divergence, neg D over there. But I'm expecting us to kind of see, like a lot of people have been saying, that we may revisit the 200-day moving average somewhere around here and go up here. And you start hearing that a lot over the weekend. So, after Friday closed and we got confirmation that the whole day that it went up by quite a bit, 100 points on the S&P, and now some time over the weekend to digest it. I'm seeing a lot of more positive, vibes on the internet that, we're probably going to go up from here. The only difference is I made that call on Thursday night and I took action the moment markets opened on Friday morning and rode the whole thing up. And so that's what this indicator is. People on Discord ask me how I calculate this. Well, some things I'm going to keep to myself, and this is one of them, right? It's a formula I calculated over 5 years ago that I've been tweaking, and I know how to work this indicator. And so every once in a while I'll show you when it flashes, I guess. And again, I'm not trying to make money off of this, right? I make money off of my trades, and if you're a good trader, I wouldn't know why you would want to make money selling courses. Selling memberships or all this, asking for donations, all this. Like, look, if you're a good trader, why would you need money from doing that, right? So the moment I see somebody who claims to be a really good trader and then he's selling you courses and he's selling you like membership fees and all this, like, it's a red flag for me. I was like, why are you doing that if you're so good? If you're so good, if you're rolling in cash, you have no time to be spending or no, need to be spending trading courses and all this. So it's because you're not as good a trader as you hope to be. That's why you're doing this, right? I'm not saying that I'm a good trader. I'm just saying, like, my focus is on making money off trading, not to be making money off these courses, right? And so while I won't share you like certain IP that I create, such as this indicator, I will tell you and as informational and entertainment purposes how I'm using it, so you can watch me either crash and burn doing it or actually make a boatload of money doing it, right? And so that's why I share this kind of stuff. It's not to make money on something else. Like I see some other people do. Then the question becomes, well, is that it? Was this a low for the year, or are we going to have lower lows? And is this the beginning of the bear market, or at least some, bigger slide later on? And my opinion is this is not the low of the year. Yes, it was a controlled down. Downdraft of about 10% correction that was well orchestrated, but I think we're going lower. And I think the next time we go lower, it won't be the orchestrated variant, and the VIX will shoot up to true fear, not the fake fear that you see everybody else talking about, the fear gauge and look at the VIX for real fear. And I think that we will. And one of the reasons why is we're actually tracking what happened 21 quite well, right? So back then, it also was a Wyckoff distribution pattern, right? With this final spurt up here that broke above, the highs that were holding before the LPSY came down, right? And if you look, we actually, this is not updated, so I just drew, the chart but we're around here, 550. That was the bottom basically, which is near around here. So we fell about the same amount, 10%. Right, and then what happened? Well, we corrected back up here, right? So like I said, I think we're going to correct again to the 200-day moving average. Now, what happens here is, are we just going to go up, or are we going to just make a lower high and shoot back down? And I believe so I was originally of the camp that we would still have a final blow off top, right? After this correction, that we would still make a new all-time high, and then the rug would get pulled. But the amount of which we went down here, even though it was controlled, was larger than I anticipated. Even though I made money throughout the whole way down, it was more than I thought it would be, right? And for that reason, now I'm not so sure about really a new all-time high before the end comes. We may actually, because of the amount we have gone down, which was more than anticipated, not be able to muster a new all-time high and do a lower high, kind of like what we did in 21 before the bottom drops out, right? And so that's kind of now my updated base scenario of what's going to happen this year. And that base scenario pretty much follows this cycle, right? Where I do think we're going to go up here to this, essentially this bull trap where everybody will think we're back to normal before the floor evaporates and you drop into an air pocket, into a crash down here. And we've gone, it could be that the top has been put in and we just don't know about it and won't know about it until years later, right? To confirm that in fact was the top. We don't know. Too early to tell. But I do believe that, it's over here. Some people will say that, we weren't bullish enough before this came down, but the fear happened when we were going down, right? It wasn't up here. And so I do think this pattern is going to play out, and I really am looking forward to this part, right? But I will try to join here. Like I said, I kept my money long over the weekend because I'm that confident of my indicator, that we did put in an interim bottom on Thursday night. So kept it long. Let's see what happens when the markets open, the futures open in Europe on Monday morning, early morning. And yeah, so that's now the base case is I don't think we're going to go I think this is over, right? We're not here and we're still going to make a new all-time high. I think we've made it, and we're going to make a lower high before we're going to have real panic and fear and a disorderly and I don't know what's going to cause that trigger. It could be Trump, right? He might be like, F it, right? That's it. I'm going to force a hand and want them to learn. So I'm going to do something that's so shocking, right? Like much more shocking than what any of this tariff stuff that he said so far. Like come out and say like we're revaluing gold, or which I've been talking about, or some crazy thing like that. That will just like catch so many people off guard, will have real fear, real disorderly sell-off, high VIX, and that would be the end of, basically the bull market, right? Or rather the bull trap, and then we would crash down here. And I think that is coming in the coming months. And this pattern, is a very well-studied pattern, right? Like it was the pattern in the dot-com boom and bust, right? We made that high here, right? Which I think we're in the process of making right now. We're here, and we're going to try and make it here, right? And I showed you in 2021, similar thing, right? I think this is going to come before this happens. And the scary part is because this bull run has been so high, right? This bull market's been going on for so long. It could be like what happened in the 20s, right? Where in 1929 we had this crazy run up. We had a similar Wyckoff, right? Which is just this thing with a horizontal line, a final little blip, and then it goes down, and we kill the support, right? Before we do this again, which is the lower high, last chance for bulls to get out before the bottom drops out, right? So I do think this is going to happen, guys. Look, things can change if we in this counter trend like go really higher than and actually come close to then I'd have to flip, right, my base case. But I probably would be writing it up still, but I don't think so. I think we're going to try and then suck everybody back in, and then that's when the bottom's going to fall out. So having said that, thanks for watching. This is crazy times, guys, but it's also really, really good opportunities to make life-changing generational wealth, which is the whole point of this channel. And so if you like this content, please do give it a like, subscribe to it, and share it with other people so that the algo picks it up and more people get to see it. If you have a chance, check out the Discord community. Conversations going on every day, questions and answers, and a lot of good information being thrown around by all kinds of different people from different parts of the world. So until the next episode, stay safe out there, guys. Peace.